Hi everyone, welcome back to Be Rich. It's still Coimbatore for me. I'll be here till tomorrow. So I had to get this video out done today. Since tomorrow I'm heading back to Bengaluru and I'll be there Bangalore for a few more days before I head back to Chennai and finally getting back to the studio, which I'm looking forward to. Seeing my boys again in the studio in the familiar environment is going to be nice. But anyway, those still a few days away. So today I wanted to talk about defense stock and the defense sector. A lot of you have been asking this because of what's happening with US and Israel and Iran, and do we see a prospect of making a play here? Because there are some great defense companies such as Lockheed, RTX, Northrop Grumman Corp, General Dynamics, and of course even Boeing is the mix of that. Boeing, I should do a separate video because a lot of you have been asking, since the recent correction in Boeing where it dipped below 200, is it looking attractive? That is a good question. And I should deep dive into Boeing and explain what all Boeing does. And it's just more than making passenger aircraft, so they're very famous for that. But that I'll set it aside for another day. But today I wanted to pick Lockheed Martin and talk about that. So why should we look at Lockheed Martin? It has a market cap over $114 billion. It is one of the top federal contractors in the US for the American government. It's quite an old company. It's very famous for all the work they've done in avionics and the fighter jets. And looking at the volatility, there might be an option. Of course, recently they had a correction of 7% in their stock thanks to the Pentagon halving their F-35 fighter jet order. So that led to a bit of a dampener in the market and the price moved. But the question remains, as long-term investors, should we look at picking up a few of these stocks and putting it in our portfolio when we find them at the right price? I'm not here to debate about war. I'm not here to debate about these companies. Is it right or wrong in terms of values? I'm purely here to talk as value investors, and I purely want to see, is there a value proposition here? The moralities of it, I leave it up to you. Each of you are an individual person, and in your own cognizance, you can make the right decision what you think is right for you. Why do these stocks matter? Because there's stable government revenue, especially the American ones, because the F-35, the B-21, the submarine programs, all these are recurring cash flows and predictable defense budgets. So these companies are very big. In terms of valuation, some of them are right now at a discount. So looking at historical averages, they do look attractive. And there's a massive, most of them have a massive backlog of orders. So revenue is also assured. And also geopolitical drivers. If you see the rising tension around the world, that also makes sense because nothing is good for defense business like war. And we seem to be heading more and more precariously towards this. Like I said, the top defense stocks in the US are RTX, Lockheed Martin, Northrop Grumman, and General Dynamics. And we're going to deep dive into Lockheed Martin. How do they do the last quarter? Well, the EPS was up 14%. The revenue was up 4.5%. And the free cash flow stands at $955 million. And recently they did a $1.5 billion buyback, returning a lot of cash to the investors, which was much cheered by the investors. Then, of course, like I said, that's an order backlog of $173 billion worth of backlog with American government. This is before the news of Pentagon halving their F-35s. So we have to revisit that. The debt is very low in this company, and they have a very solid interest rate coverage too. So there is really no red flag in terms of finances. So where does it come in terms of valuation? The PE is trading at 17.3, which is quite reasonable, looking at historically too. And the current price, it's at $487. Discounted cash flow puts it at $365, and intrinsic value, before I get to the relative values, at $661, and intrinsic value, which is the average of those two, is at $512. So it's around 5% under value, and it is worth noting, historically speaking, it's right about there. So there's not a big divergence in terms of where it's been historically. That's because of the recent correction. It's fallen 5%. So you can leave it. It was probably fair value a few weeks back. So the main reason why it corrected, of course, like I told you, is the order by the Pentagon being halved for the F-35s. So here's the question which I want to leave you. Should you be looking at this? Should you not be looking at this? I leave it up to you. I do see value in Lockheed Martin, and I do feel it is a company which should give you rich dividends and something which is worth holding on to in the long term. Is it the right price at this current moment? It is touch and go right now in terms of pricing. I wouldn't say it's overvalued. It is close to being fair value. So if you were planning to enter it, you can look at it entering one or two stocks here and there if you are wishing to make a play for defensive stocks. Usually when we say defensive, we're talking about stock portfolio being defensive against growth stocks, but this is not defensive in that sense. This is companies which are dealing with defense and defense related industries. The last things are the red flags for Lockheed especially. I did paint a very glowing picture. There is a lot of uncertainty with the F-35 program. Aside from the recent cut, there has been other issues with it, and that contributes around 30% of their revenue. There's been persistent delays in the hardware and softwares and cost overruns, putting a lot of pressure on the margins, because these things, if you really study how they're done, they have a certain amount of money which is put into R&D, and then the research then is approved, and then there's a certain budget for that research and development, and it's really complicated. But the best gist of it is they are feeling a lot of pressure on the F-35 program. That is why for the 7% correction. And then profit and cash flow pressures are always there because of financial losses. Lockheed Martin has disclosed saying some classified programs and the upgradation of the F-35 has been depressing profits for this year. So this is another reason. And of course, there is also a whistleblower thing which recently came out internally about Lockheed Martin and about discrimination which has happened. So that will also have an impact. And contracts can also be cancelled because of competitive bids being placed and downgrade of programs. So these things can lead to a sudden volatility in the price and earnings. So I know today was a short video. I just wanted to talk about this quickly, get it done, and offer you something on Sunday because I'll be traveling on Sunday and it will be impossible for me to record it. So I wasn't able to look at your comments and review them, which I promised to do on Monday, to collate the comments from this video and the previous video and answer all your comments on that one. So thanks for watching the video. As always, I hope you have a wonderful day or evening wherever in the world you are watching this from. And let me know in the comments down below what do you think about defense stocks and especially Lockheed Martin, if you are looking at Lockheed Martin, if it's there on your watch list. Nothing else more to say. I hope you have a great evening. Good evening from me. Bye.